Hey guys, what's up? Alec back with the daily stock market, and look at that, another bipolar day where it drops very big in the pre-market and opening, and then it rebounds back up to basically no percentage loss, and then it goes back down, and now it's equaling out on the day. There's about an hour left till the market closes, so we'll see how things shake out. Now, this video is going to be a quick market recap, but it's going to go into a deep dive onto Upwork versus Fiverr. I think Fiverr is a great stock to buy currently. They're probably around 2 to 5% of my portfolio diversity right now, so I want to dive into Fiverr, see what's going on with them, and also go into Upwork, see which one's a better deal comparative to each other. Now, we really don't see too much going on with the stock market. In the morning it did dip like I was saying, but now it's starting to leverage out. We see Palantir up 3% on the day. I know a lot of you guys have some options in that and some swing trades going on, so you're probably making some good money currently with that. It looks like it's heading up to a resistance right at 27.38, so just be careful of that resistance. And I probably think it's a good time to sell, even if you do some lines, some resistance and supports, and draw it on the graph. Obviously, you guys could do this yourself too, but this is typically where I like to swing trade Palantir. SoFi is up 5.5%, so that is a great thing to see after it went down around 5% on the week. We see it coming back up. It looks like it's at its lower support, so we should be seeing that one bounce back up to the $17 range or higher. Riot was also making some good moves today, was up around 5% on the day, and now it's only up around 3.9 or 4%, so we'll see if it can hold. And we see it struggling recently, going down to around $24, $22 a few times, and we see it bouncing as high as $35 per share. So if you can get in around $26, $24 and swing trade it up to $30, $35, I think that could be a pretty good swing trade. You have to manage your own risk and do your own due diligence and all your own research. I'm just telling you guys what I see personally. Mara was almost up around 7% on the day. Now it's cooling down a little bit, almost up 5% on the day. And it's pretty similar to Riot, but Mara moves a little bit more dramatically. Now we see Win down 7% again on the day, so that's a big downward movement for Win. And what's going on with Win? There's a lot of regulations in China because they have some resorts in Macau, which is in China. And China's trying to get a little bit more access to the gambling privileges that Win is bringing in. So there might be some new regulations and concerns with the China side of Win. All right, so that's good to push it down in the short term. In the past week, it's down 17%. But this is still a great long-term stock, in my opinion. So if we see it around 74, 75, 76, or even go as low as $65 again, I'm definitely going to be loading the boat on Win the closer it goes to $50 per share. But I'm definitely going to start buying some under 80. I think it can definitely go down to $80 per share. You may even want to consider some puts on Win, which is extremely risky in my opinion because you kind of already missed the boat. It's already down 18%. Yeah, it could probably go down another 5 or 10%, but there is no guarantees. Now, here's another one that we've been buying in the close friends group, and we were talking about on my YouTube channel in a video in the past. If you guys follow my YouTube, you probably even remember that. So Lucid's up 6%. We were even talking about doing an option on them. So whoever took that out, congratulations on that little percent gainer there. Now, they are down 12% on the month and still beaten down pretty good. Remember, anything under $20 per share, I typically like to load up some shares on. And I'm trying to get rid of them around $23, $25 per share on a good little swing trade on Lucid. Okay, so now let's do a quick dive, a deep dive onto Fiverr versus Upwork and see who's the better freelance app overall. Now you can see they're up 8% in the past month. We're up 6%, so we pretty much bought at the bottom around $174 per share, $1,600 or 9 shares. Now you can see they did end up going as low as $161 per share. So whoever bought at the very bottom, congratulations on that. But we bought as close to the bottom as possible, $174 per share, and they've already bounced back. Now the question is, can they keep bouncing back? Remember, they were up all the way to $320 per share earlier this year. Personally, I think the freelance market will keep growing and growing and growing as time goes on. More people working from home, more people having their own businesses that they need work on, websites, logos, photography, whatever it is, freelance will always be there. So that's not what this video is about. It's going to be more just about Fiverr versus Upwork, the two leaders in the space. Now, we see Fiverr above $200 per share pretty frequently. I think it can definitely go above $200 per share. And my opinion, I think it can go 225 to 250. That's the sweet spot for me to be selling at personally. I have a reoccurring investment, $25 per day, and I'm probably going to turn that off once it goes above $200 per share again. But let's look at the market cap, around $6 billion market cap. I think that could be closer to $10 billion market cap. And the average volume is really not that high. So not a lot of people are actually diving into this one and trading Fiverr. So it's a little bit of a sleeper. Now the 52-week low and the 52-week high is double. So the 52-week low is double the 52-week high, which I typically don't like. It implies a lot of volatility. But with something like Fiverr, we're buying closer to the 52-week high. We're buying closer to the 52-week low than we are the 52-week high. So I'm okay with it in this situation. Now, if you've been following my channel for a long time, we got an Upwork an extremely long time ago, around $15 per share. I don't know how long a lot of you guys have been following me, but you can actually see right here. So in April, we bought in, we bought, we sold, we bought, we sold. But all the way in August 2020, we started buying at 10 shares at $15 per share on Upwork. And we bought a lot more after that. So 150, $40, $40, $100. So we continued to buy them, all this around $15 per share. We made a huge swing trade and a huge profit on Upwork, around 200%. All right. Now, as you can see, Upwork has a lot more volume, so a lot more people trading. The market cap is actually very similar to Fiverr, so they should be very similar when we compare revenue, net income, and all that, because they're pretty much the same sized company. Now, the 52-week low and 52-week high is almost triple or quadruple, so that's a little bit concerning. Especially when you're going to be getting in closer to the 52-week high than you are at the 52-week low. So that's a little bit concerning, but you can see they did get beat down a little bit here, and down to that $40 mark, I think is a good place if you want to buy in for a swing trade or a longer term hold. I think $40 per share is realistic for Upwork to be going down to again. Their earnings, they have been beating very consistently, and their last earnings was one of their best earnings. So keep that in mind too. So hopefully we'll just see them keep growing and growing. They were actual profitable last earnings. And as far as EPS or earnings per share, we see Fiverr. We have Fiverr pulled up, and they have been profitable for the last 4 quarters also. And they're around 20 cents EPS now. Now on my Webull account, you'll see I also have another $1,300 of Fiverr, and we're up 10% on that. And if you're looking for a great platform to do some trades and sell Bitcoin, buy Litecoin, you can even buy Shiba on Webull. Webull's a great app. Message me on Instagram. I have a sign up link, and I'm going to be doing a giveaway. Any new users to Webull get 2 free stocks, okay? But you'll also get $10 for free. I'm going to actually Venmo you or Cash App you 10 extra dollars if you use my link to sign up and at least deposit $10 into the account. Okay, so I'll Venmo you, Cash App you $10, and you'll also get 2 free stocks. You'll get to use a great platform. Webull's my favorite platform, more than Robinhood. You can set price alerts inside the app. You can buy Shiba, you can buy Dogecoin. You can do all the stuff that you can't do with Robinhood. So I definitely recommend, if you already have Robinhood or a different app and you're looking for a second brokerage, Webull is definitely the app to use. They're extremely useful. You can even look at all like the market news. You can look at United States. You can look at crypto news. So you can track all these different cryptos. You can see global news, what's going on. You can look at Forex. You can see futures. They even have a community where you can actually see, you could follow people. And they also do great give backs too. So if you have a community of people that don't have Webull and you can recommend like 2 or 3 different people, you can actually get a full share of Apple right now. So definitely reach out to me on Instagram if you don't have Webull. I'll send you that link. Use my code to sign up, and I'll Venmo you $10 extra for using my link. You know, look right here. You can actually, if you just refer 3 people, you can get a full share of Apple for free. So only do that if you enjoy free money, okay? Now, if you're also wondering why I look at my income statements and balance sheet, this is all done on Webull. So if you like these demonstration graphs and everything, you can do it yourself using the Webull app. And remember, you get those 10, that I'll give you the $10 extra by doing that. So let's jump right back into the video. Income statement, we have Fiverr pulled up. So we're looking at Fiverr first. All right, we see that they have been negative in 2020, 2019, 2018, 2017. They turned profitable. Remember, we already saw that they were turning a profit. And you can actually see here, we see their year over year, their total revenue is up 59%. Their cost of revenue, their gross profits. But let's scroll down here and look at their net income. It looks like it's still saying that it is negative for Fiverr. So that's not a good thing. It's a great thing to see their net income up over 55%. So we'll see how, in a second, how Upwork is going to be comparing with Fiverr. Now let's look at their revenue. We see 75 million in 2018, and they're growing revenue 40% and 76% in 2020, which is a revenue monster, absolute revenue monster to grow by double digits and grow that much, up to 189 million on their revenue. Now, just in one quarter, they did 75 million. So that's awesome to see right there too. That's about on track for 300 million, somewhere around there. A little less than 300 million if my math is correct for 2021 revenue if they can keep that pace up. Now we also can focus our eyes down here to their balance sheet and see that they have 59% liabilities to assets. So they have more assets than they do liabilities. That's a great thing, but not by much. You know, we can actually see that their total assets are 800 million. Their total liabilities are 500 million, which are not too far off from each other. Their short-term investments is up 274%. Cash and cash equivalents is up 75%, which is a great thing to see. Their total assets are actually up 121% to 890 million, which is almost 1 billion. And their total liabilities are up 354%, which isn't the best thing in the world, but they still have a lead on assets compared to liabilities. Now we have Upwork pulled up, and their net income is basically the same thing as Fiverr, so we really won't look into that too much into detail because it's basically the same thing. They're both negative companies, unfortunately. But if we go over to financial details and click on total revenue, we can actually see that Upwork has a lot more revenue that they're bringing in, and they have a lower market cap also. Now, they're not growing like Fiverr is growing their revenue like 40%, 70% year over year. They're growing 23, 25, 18, 24%. But the good thing is they're already at that $400 million price tag on their total revenue, basically. And if we go into their income statement, we can actually see that their revenue, their total revenue is actually 124 million just in one quarter. So if they keep up that pace, they can actually hit $500 million in revenue. So they're actually doing more revenue than Fiverr, and their balance sheet is a little bit better than Fiverr's too. Okay, so that's making Upwork the better company, the safer company overall currently. So Upwork is currently the winner in this scenario, but Fiverr has dropped so much. They're good for a short-term swing trade, and I think you can still make some good money on Fiverr, swing trading up to $220, $225 per share on a swing trade. But the one you definitely want to be holding for long term, I think Upwork is the more professional one. They charge more. That's why their revenue's up. You know, Fiverr is still charging $5. People are only making $5. They've upped that a little bit. Most people are probably making $20 now, but Upwork's more of a professional service, and the freelancers, they charge $100, $200, $300 for their service, which, obviously makes their revenue up higher. So Upwork, I think, is going to be more of a professional environment for freelance work in the future, and Fiverr is going to be like the McDonald's of freelance. They'll probably still be everywhere and a good company to invest in for the long term, but they're not going to be the top of the top, something like Upwork is. Now, with that being said, remember we said that Upwork's a little bit overvalued right now, and we want to buy closer to $40 or under $40 per share. But that's very hard to do with Upwork because it seems like it just keeps going up and up and up. But remember, at one point, when nobody was realizing it, Upwork dropped all the way to $5 per share, and nobody even batted an eye. And that's when they were even bringing in more revenue than Fiverr was, and they were bringing in similar net income as Fiverr as well. So that's why it's important to look at the revenue, net income, see who's going to be the better one overall. I think Upwork is going to continue to grow their revenue and their bottom line and their top line, but Fiverr seems to be growing at a faster rate, which is a great thing to look at and a great thing to consider. So overall, I think they're both great companies. I think Fiverr is going to make you more money in the short term and quicker money in the short term. And Upwork, they have a chance of going as low as $40 per share or lower. So you definitely want to be holding for the long term when it comes to Upwork, because in the past year, they're up 211%. And if you go to something like Fiverr, in the past year, they're only up 500%, which seems like they have more room to keep running up and up and up, especially when they're growing revenue percentage points more than something like an Upwork's growing. So I hope you guys did enjoy that video. We're seeing the stock market continue to rise as the close gets closer here. Reach out to me on Instagram if you need a little bit more help in your account. If your account doesn't look like that, we're only up 40% in the past year, which is still phenomenal. There's a lot of agencies and hedge funds, billionaires, and corporate people that try to get 40% per year, and they can't do it no matter what. Anyone can have a good month or a good 2 months or even a good 3 months, but you really want to look at the past year to show the results that you can get consistently. So anyone can show you a good month or a good 2 months, but you really want to look at the past year to see the results that people are getting. And this is not even when my account is topped out. We're looking pretty down right now because in the last week, 2 weeks, the stock market has been going down. So typically I'm up 50%, 60% on the year or more. And if you subscribe and make sure you tune in to future videos, I'm sure you'll see my yearly support and resistance up to around 60% gains, 50% gains. So make sure you're subscribed. And if you need help getting 40% per year or more growth, reach out to me on Instagram. I have a close friends list with over 1,000 current clients inside of it and over 400 positive testimonials now on clients who've seen success and made thousands of dollars, some making even $20,000, $30,000 over a couple months. If you want to become more successful in the stock market, reach out to me on Instagram. I even have a crypto class and an option trading class if those are more your speed. And my gains on crypto are even more than 40% per year. All right, guys, I'm also going to do another video later on this week showing you how important 20% per year is. So not even 40%, but if you just get 20% gains per year or 30% gains per year, you set yourself up very significantly for early retirement. And some people are able to retire with $10 million in their account just by getting 20% a year. So we'll do a deep dive into that video. We'll run a bunch of different numbers. We'll even do it for someone who can only invest $200 per month. So if that's you, you can only invest $200 per month. You can still become a millionaire through the stock market, and I'll show you step by step how. Just make sure you subscribe, and it'll come out later on this week. It might even be a Saturday video right before we do the Sunday stock talk. So make sure you subscribe with post notifications on. Smash the like button. It only takes 2 seconds to press that subscribe button. It really helps me out as well. And make sure you share with a friend if you think that they can find value in this video as well. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.